Welcome back everyone to another episode on Ang's channel. Today is the last day of 2025. I just want to sum up some of the investment lesson that I learned, as well as what is the situation of me currently and what happens of my account portfolio changes in 2025 and my goal in terms of 2026. So without further ado, let's get right into it. So today, looking at the positions, you can actually observe most of the portfolio allocation does not actually change a lot, and some of them are still in losses, whereby you can observe in terms of the SLG and the Duolingo, which I actually bought previously due to its increasing revenue and net income and so on. However, it's just a lot of bad news as well as bad reputations about it, and then it's right now it just keep on suffering. But I do add on a single share again at around price range of 200 plus, whereby right now I will be able to break even with a lower price average of around 270 and so on. Back in the starting year of 2025, one of the great options that I have made is going to be holding ASML, which right now is sitting around 50%, 55% of profits, as well as Apple, whereby I bought it at a low. At that moment of time is whereby all the other stocks within the Magnificent Seven, all other six companies are going up. But Apple is just sitting at the low of the previous tariff threats and so on. And me personally, I do like the mode as well as their business model or what they will be able to provide in terms of their product and services, as well as the premium that they receive by their consumer in order to use their products. It's just attracting me in order to just hold this company for a long term. And I just buy it at the lows during that time, which is around 200, and right now it's generating about 37%. However, the allocation is actually small, whereby it only has small effects or profits to the account. So overall, you can actually observe the changes will be very small as well. For example, adding one more shares on Duolingo, as well as I bought in on the Meta, whereby it has a pullback around 20 to 30% discount. I bought it at 632, and right now it's currently sitting at profits of 4%. However, I do understand that Meta is a very strong economic mode company with great records in terms of their financial status, very good cash flow, as well as more cash than the debts. So it's one of the most attractive trade that I have taken, although the returns has not yet been represented or implemented. But I do believe that in the long run, this company will provide a lot of profits in what they are providing as well as their service. So overall, you can observe there are wins and losses, but overall the positions right now is actually in a positive, whereby I'm still healthy. So as for the goal of next year 2026, my goal is to actually exit some of the stocks that are in a losing streak, and the criteria of me exiting those stocks or those company is when I found a good entry opportunities on other great companies such as Visa, MasterCard, or even Microsoft or Costco and so on. And if at that moment of time I want to buy those stocks, I will actually start selling these losses and just to buy all of that discounted great quality company stocks. Because what I realized is that instead of just waiting for the companies that you hold, which is in a loss, and you analyze it is somewhat in the form whereby they start to lose their momentum as well as strength and confidence from the consumers, it just does not worth it in terms of just holding long term. Instead, you can just sell, take some losses, and then invest the remaining capital in some great companies which will be able to provide returns in a more confident way, as well as positive results and feedbacks from the market, such as buying the Apple, Amazon, and so on, whereby it will be a better options in order to run long-term profits. Another thing is going to be lowering the allocations of my companies. So right now I'm having 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So I have actually having 11 companies within the stock allocation itself. Well, there's other accounts such as the IBKR as well as Weibo. I have holdings on the United Health as well as on Google's and Texas Roadhouse. The aim for me next year in 2026 is to reduce the allocation and mainly to put on very high quality companies, whereby I would be specifically aiming on only those companies with strict rules on my 7 criteria and so on, whereby it's important to just hold them long term as well as to enter if they are cheap enough or they are being discounted. So my goal right now is to reduce the amount of stocks allocation that I have, but also to have a more reasonable allocation whereby I have lower allocations on high quality stocks, but at the same time I have a small percentage of amount whereby maybe 10 to 20% of the funds allocated specifically for speculative stocks, such as maybe Duolingo, maybe Hims and Hers, and so on. But that's just another story of the other day whereby I still learning about speculative stocks whereby I don't actually understand how it works to identify whether or not if it is a high possibility of this very strong speculative stocks like Palantir, Nvidia, because it's really hard to identify unless you really go into the market and do very long research and so as due diligence, and only then you can find it. And yeah, right now I just don't have any list of potential speculative stocks that I'm going to hold. Plus, I'm also in the position whereby I hope all the losing stocks that I'm holding right now, they will be able to retrace back a little bit before I exit with lower losses and so on. And one of the reasons I don't sell them right now is, especially right now, I don't see opportunities or cheaper entries for other very high quality stocks, and it just does not have that necessarily need for me to sell them immediately because I have no immediate use of that cash. While you can actually say, isn't it better for you to sell right now because in the future it might drop even lower, and when you sell in the future at a lower price, you have less capital in investing on the other so-called great companies that you mentioned. Well, that's correct, but there's also potential whereby the stocks will actually retrace higher a bit, whereby I can actually go for a lower losses and reduce my loss with higher capex and buy cheaper on the other great company stocks. So that is just one way in order to handle these situations. And my goal again is to reduce my allocations. I will just aiming on the specific very high quality company stocks with great incomes, great cash flow, less debts, high economic mode scores such as Apple, ASML, Meta, Nvidia, and so on, and allocation of 10 to 20% on speculative stocks, and hoping that it will actually grow 10x and 20x like Palantir as well as Nvidia. So it's just some of the lessons that I learned during the year of 2025 is the drawback, especially from the threats of tariffs during the April, whereby it is always the best time to buy when people are mostly afraid of. So back in the April, back in April, you can actually observe the VIX value surge up to the level of 60. So this is where most people are afraid of the market. And actually, that is the point of time whereby it's the best entry because all stocks are in discount, all stocks are cheap enough. And if you will be able to buy at that point of time and hold until now, you will earn a drastically amount, maybe 10, 20, or even 30% of profits. This also explains why people likes to buy at a cheap or at bad news or bad situation whereby people panic sell and they will be able to buy cheaper and so on. Buy cheaper, especially on those very high quality companies, and the selling is just maybe due to the fact of people having weak hearts or they are just afraid they want to cash out immediately, and this is the best time for you to enter. And since everyone is mentioning about the situation is the end of the world, if it's already an end of the world, why don't you just put all the money back into the stock company, because even if you have that amount of cash and it's at the end of the world, it wouldn't be having that much of a use. So the situation of this 2025 lesson first is going to be always buy when people are afraid. Look at the VIX value, look at the current situation whereby people are afraid when they most likely to say about the situation whereby, oh, the world is ending, the US market is going to crash. Most likely it will not, because at the moment of time it drops to a certain level of a certain discount. Smart people will buy, smart institutions will buy. And also the second lesson is going to be when people are worrying about the recession happening, most likely it won't. So back in this case study of 2008 as well as the dot-com bubble, when some people are talking about the market is in a bubble, the market it's actually quite wrong to have this kind of a company with no income, no cash flow, but the price just surged to the skies and nobody cares. And that's the time where bubble burst. And back in previous months, which is around September to November, is whereby a lot of people have been talking about recessions and so on. That's the time whereby market does react to it, small pullbacks, small reactions. But when times people are concerned about the recession and bubble burst, usually it won't, because that's the time whereby people will be more cautious about the market. They will start lowering their allocations, start selling, and this is where the market pullbacks. And these pullbacks is a healthy reactions for a better growth and better going upsides of the market. So the lesson that I learned second of all is going to be, and also based on the first lesson, is doing things that is opposite of the market. When markets are scared, you're greedy. And this is the lesson that mentioned by a lot of people, by a lot of successful people like Warren Buffett and so on. But this is something that I experienced truly in real-time experience about the market. And just by listening to the people saying that when people are fear, you have to be greedy, does not sound valid and so on. But right now, after experiencing this kind of a process, it actually quite makes sense. And also it actually being proven by historical data as well as historical event, which shows the same thing over and over again. And also, when people are scared, you be greedy, and when people are greedy, you should be scared. But by scared, I don't think I will be selling all my positions, but maybe lowering my allocations, take some profits, and wait for them to pull back, or just hold cash tightly until more opportunities came and I'll just enter at the right. So another lessons, which is the final lesson learned, is that you have to have a level of safety whereby if the stock price or the stock of the company goes down to this level and then form a confirmation whereby this is a support with a bullish pin bar and engulfing and so on, you have to trust yourself, because before this happened, you already told yourself, if this stock price goes down to, for example, right now goes down to 5,500, I would buy it. And this actually happens to me whereby during the tariff threats, I was for sure that, or if the market drops down to the certain level of here, I would actually wanting to buy. But when it actually comes to that level and sort of forming some of a support confirmation, I wouldn't dare to enter, because I thought that, well, the tariffs doesn't seem to have ended yet, but in reality, a lot of people is already buying back and ready for the ride. And one of the lessons is that you can't predict when is the end of the bad situation. You can't predict the end of the COVID, you can't predict the end of the dot-com crash, you cannot predict the 2008 crash ending. And just buy at a level whereby you think is a suitable and reasonable level for you to enter, which is safe enough. And also, if you're afraid that if I buy this level, it could actually go lower to this level, what would I do? Well, you have to maybe separate your allocation of funds. Instead of entering at the previous level that you set in full amount, separate it into half. I buy half first. If it drops further, I buy more. If it goes up, I will wait for the going up trend to have a slightly pullback, and then I will enter it again to capture the long run and profits. So it's actually about mindset. And based on the experience, although the situation and the events that I experienced in the 2025 is not as big as COVID, it's not as big as the .com or the 2008 crash, but it represents similar patterns as well as the mindsets and psychologies, whereby it's very important for all investors to know that this stage is where when people are fear, it's best for you to be greedy, but also take note that there will be risks and plan your steps as well as plan your entries based on your risk appetite as well as how you are going to handle the market. If it goes down, if it goes up, how you are going to react next, and always be a step forward of the market. I'm not saying to predict it, but if you set the price whereby if it drops down to here, I will buy, then you just execute once that happens. And you also have a plan whereby if it drops further, I will still have more allocations to buy more, and if it goes up, I'll be all good. So that is also the final lesson that I learned. So there are actually many more, but then I guess that is the major ones that I actually learned, and to actually experience myself about the lesson that is summarized from all that professional traders and investors. And it's actually quite good, especially and I'm happy that will be able to learn and experience from this kind of a event as well as situation. It makes me think more about on how to invest smartly, and hoping that I will be able to implement what I learned next year, and also to try to reposition my portfolio allocations and make it more concentrated on only the very 1% high quality company stocks with positive cash flow, net income, as well as great economic moats, as well as edge over this competitive US market. So I guess that is all. And this is the end of 2025. We are going to welcome 2026. And over here, I'm just going to wish all of my audience, friends and families, Happy New Year, and wish you having a prosperous year next year, and hope that you achieve your goals set in 2025, and if not, continue in the next year. And also, I hope you have a great year of horses in terms of Chinese, and I guess I'll see you guys in 2026. Goodbye.